Welcome back to the Finder Investors channel. I'm Kylie, and in this video, we'll be looking at how to invest your first $1,000 and double it within a year. Okay, so how to invest $1,000 and double it within a year. Okay, so in this case, our goal is to get $2,000 within 12 months. Realistically, your only option here is by investing it in the stock market or potentially a cryptocurrency like Bitcoin. That's because if you want to earn high returns, you need to take on a higher risk investment. So generally speaking, the greater the potential for return, the higher your risk. And these two assets can be pretty risky, although not always, and I'll go into that in more detail later. There are plenty of ways that you can invest your money. You can invest in stocks, bonds, gold, a term deposit, a high interest savings account, while you have the highest potential for return with assets like cryptocurrencies or stock market. Your safest options like term deposits and high interest savings accounts, which have zero risk, will probably only get you a return of around 1%, so that's around $10. Okay, so the Forex market is another option here, but in my books, that's less about investing and more about trading. So that's a video for another day. For today's video, we're going to focus on investing in the stock market. So first off, you're investing a smallish sum of money like $1,000, so you'll need to find an online broker or share trading platform that has low brokerage fees. That's the fee that you pay every time you make a trade, and broker fees can vary hugely from broker to broker depending on how much you're investing. So to improve your chances of doubling your return, that will need to be a key consideration. Some brokers these days even charge zero brokerage, typically for US stocks, depending on which market you're buying from. So it's worth checking these out too, if that's an option. How does it work? A stock market is like any other market, a place where you can buy and sell products. In this case, it's company stocks, and the goal is to buy for a lower price than what you'll eventually make from it. The other way to make money from stocks is from dividends, which is where you get regular income payments sent to your account based on how much profit the company is earning. But dividends typically only pay about a fraction of the price of the stock, so you're not going to double your investment this way. It's all going to be through capital growth. So selling for double the price you bought it at. First, just a bit of context to start with on how tricky this is to achieve. Warren Buffett, often called the best investor of all time, has generated an average gain of 20.8% per year, double that of the S&P 500 index, which is an index of the top 500 biggest US companies. So it's clear just how difficult a 100% return is. I've never heard of anyone that has been able to double their investment consistently over the long term. That's not to say it's not possible, it just means you need to make a higher risk investment. And to double your investment in a year, your best chance is to focus on one or possibly two company stocks. By investing in one company, you just need that one company share price to double in value, as hard as that is to achieve. If you purchase two stocks with your initial $1,000, then you have a tougher challenge on your hands because you need both of them to do that. Essentially, the key takeaway is that you'd have a far better chance of success through picking a single winner as opposed to multiple. The safe option, and the advice most often given to investors, is to invest in a diversified portfolio of stocks. This is so that if some of your stocks fall for any reason, your losses will be minimized by your high-performing stocks. But by that same token, if some of your stocks do amazingly well, your profits are also minimized. So diversification is not a good option here if you're looking to double your money in 12 months. Side note, we're also not recommending this. The next point is that you'll likely need to invest in a growth stock or a highly volatile stock, in particular stocks that you hope will rapidly go up. Safe, blue chip companies like major banks are very unlikely to double in price in the course of a year unless there's been a major market crash. Even growth of 10 or 20% is well above average for some major blue chip companies. The trickiest part about picking your stock is looking out for future opportunities with big upside potential. For example, maybe a company isn't earning a massive profit yet, but it has put forward an inspiring vision of the future that people can rally behind. Tesla was a good example of this, where people invested in the vision as opposed to the financials. The other point to understand is that timing here is everything. From the time the market crashed in March 2020 to February 2021, stock prices in some of the biggest global companies in the world, including Tesla, Apple, Spotify, and Google, have gained in excess of 100%. So if you'd invested in one of these companies when prices were at their lowest point in March or April, as of February 2021, you would have doubled your investment by now. But that's only if you'd bought it at just the right moment in time. Take, for example, Apple. Let's say you'd invested on March 20 at $57. As of February 24, your investment would have more than doubled to $125. That's a win. But if you'd invested just 4 weeks earlier here when its price was around $80, then exactly 12 months on, from February 2020 to February 2021, you're only looking at just a 50% gain. While the pandemic market crash was a pretty extreme example, every day thousands of stocks double in price within days or even hours. The difference is these are usually highly volatile penny stocks, which are small companies that are typically priced at $1 or less. Because they have so few stocks trading on the market, even a minor shift in investor sentiment can see stocks soaring or plummeting in seconds. For example, here we have a penny stock called Drone Shield. If you'd bought in on December 16, 2016 at a price of 24 cents, you'd have seen its price double to 48 cents 4 weeks later, and then drop again by 20% in March. So although during the course of this 12 months, you would have at certain stages seen stocks double in price, if you'd waited 12 months to sell, you'd have actually been in the negative. And timing the market to pick the exact right moment to sell is something even the experts get wrong a lot of the time. So yes, if you'd invested $1,000 around 12 months ago into Bitcoin, Apple, Google, Etsy or Tesla, and a lot of penny stocks you've never heard of, you'd have made more than $1,000 in gains over the last year. But it requires a whole series of stars to align. And for every person who doubles their money in a year using this strategy, there are just as many or more who have seen their money cut in half or worse. So what should you do if you have $1,000 to invest? Well, instead of investing in one stock, the safer option is to invest in an ETF, which is a whole portfolio of stocks. Or you can invest with a robo-advisor or start by investing small amounts into a number of different stocks. Just be aware that if you're investing a small amount like $1,000, you might not always have the option to invest in multiple stocks, depending on what country you're trading from, because each market has its own rules. For example, in Australia, you have a minimum $500 investment for every Australian stock you buy. So including brokerage fees, you could still only buy stocks in one company with your $1,000. Which is a higher risk strategy. And that makes buying an ETF probably the better option here. That being said, you don't have that same restriction if you're trading US stocks. So in summary, doubling your initial investment of $1,000 is a pretty insane goal. I've shown you how it is possible, as long as you're happy to risk losing it all. If you want to grow your initial investment for the long term, then attempting to double it is not a safe or sustainable approach. So that's it. If this video has been of value to you, please give it a like and subscribe to the channel to stay tuned for more content coming soon. I'd love to hear your thoughts, so leave any suggestions or questions in the comment section below. Doubling your money in a year, yes, it's crazy. Have you done it before? And how did you invest your first $1,000? Thanks for watching, and we'll see you in the next video.